Hey everyone, and welcome to Easy to Understand Korean Economy. We love to break down those big, kind of intimidating financial topics. And today, we're diving deep into the world of precious metals. But we're going to look past the flashy headlines and uncover a secret playbook that the most disciplined investors use to see what's really going on. Right now, the markets are absolutely buzzing. You're seeing it everywhere. Precious metals are on a tear. Gold is pushing near its all-time high, and silver is making a huge run. For most people, that dollar price is the only thing they're looking at. But here's the thing. What if that's not the whole story? What if I told you there's another number, a much more powerful metric that tells a completely different story about true value, not just today's price? It's the number the real pros are watching. Okay, so let's get into it. In this first part, we're going to pull back the curtain on this other price tag. Think of it as a way to measure gold and silver that cuts through all the noise of the dollar and gets right to the heart of the matter. And here it is, the big reveal. The secret isn't about pricing your silver in US dollars, which are constantly changing in value. Nope, it's about pricing your silver in gold. This is what's called the gold to silver ratio. Okay, so gold to silver ratio. I know it might sound a little technical, but I promise you, it's one of the simplest and honestly most powerful tools you can have in your financial toolkit. Let's break it down. Really, the idea behind it is so simple. The gold to silver ratio, or GSR for short, just tells you how these two metals stack up against each other. That's it. How many ounces of silver does it take to buy 1 single ounce of gold? And the math? Oh, it's even easier. You literally just take the price of an ounce of gold and you divide it by the price of an ounce of silver. You can do this on your phone in like 5 seconds. All right, let's run the numbers with a quick example. So let's say gold is trading at $4,950 an ounce, and silver is at 99 bucks. You just do the division. 4,950 divided by 99, and what do you get? 50. So the ratio is 50 to 1. Simple as that. Okay, so we've got this number, 50 to 1. Cool, but so what? How do investors actually use this? Well, this is where a simple number transforms into a powerful strategy. The whole strategy really boils down to this one simple, powerful idea. You're basically shopping for a bargain. Think about it. When you're at the grocery store and you see oranges are suddenly way cheaper than apples, what do? You probably buy the oranges, right? It's the exact same logic here, just with precious metals. And this chart, this shows you the playbook perfectly. Over the long haul, the ratio has kind of hovered around 60 to 1. So when it shoots up to something crazy like 90 to 1, that's the market screaming at you that silver is a bargain compared to gold. Time to think about buying silver. And on the flip side, when that ratio drops low, maybe to 40 to 1, now silver's looking pretty pricey. That's your signal to maybe swap that silver for gold and pocket the difference. And here's a really specific, disciplined game plan from financial advisor David McAlvany. And the key here, the real genius of it, is that you don't just dump everything at once. No, you do it incrementally. You take the emotion out of it. Look at this. As the ratio drops, hitting these key levels, 60, 50, 40, you just follow the plan. You swap a certain percentage of your silver for gold. You're not trying to be a hero and time the exact top of the market. You're just executing a smart, disciplined strategy. Okay, so let's fast forward. You've followed the plan, you've swapped your cheap silver for more gold. You've won, right? Well, what's the real end game here? Because it's not just about bouncing between two metals. This is part of a much, much bigger picture. So after all that smart trading, is the goal just to, cash out and end up with a big pile of dollars? For the really savvy investors, the answer is a big, fat no. And this quote right here, it just nails it. It's a rotation, not a liquidation. You're not cashing out and going home. You're staying in the game. You're just moving your wealth from an asset that's gotten expensive to another one that's now on sale. And this big picture idea is called capital rotation, and it's so important. See, the goal isn't just to get more paper dollars, because we all know inflation is eating away at those every single day. The real goal is to increase your purchasing power, to use those profits to buy more real, productive things. Things like stocks in great companies, or maybe real estate that can pay you rent. You're turning your metal wealth into assets that actually work for you. So that's the million-dollar question, right? How do you know when to make that next move? Well, just like the gold to silver ratio gave us a signal, other ratios can do the same thing. Take the Dow to gold ratio, for example. It basically tells you how many ounces of gold it takes to buy the entire Dow Jones stock index. When that ratio gets low, it's a huge sign that stocks might be cheap compared to gold, and it could be time to rotate out of metals and into the stock market. All right, let's wrap this up and bring it all home. What are the key things you really need to take away from all this? Okay, first and most important, price is not the same as value. They can be two totally different things. Second, the gold to silver ratio, it's a super simple, powerful tool to help you see that relative value. Third, having a plan, an incremental strategy is your best friend. It takes the emotion and guesswork out of the equation. And finally, remember the end game. It's not just about getting more cash. It's about capital rotation, turning your profits into other great assets to really build long-term wealth. And that really leaves us with one last big idea to chew on. We spend so much of our time staring at price tickers, right? But what if the most important numbers in finance aren't the prices at all? What if the real secret is understanding the relationships, the ratios between them? It's a powerful way to look at the world of investing. Thanks for joining me. You know, a lot of us have heard that we should own precious metals. It's almost common knowledge. But let's be honest, beyond just buying some and hoping for the best, very few people have a real, actual strategy. Well, we're about to change that. It's probably one of the oldest bits of financial advice in the book, right? Buy gold. It's a safe haven. It's how you protect your wealth when things in the economy get a little crazy. And right there, that's where most people just freeze. The questions start piling up. Okay, so when do I buy? Is there a right time or a wrong time? When would I ever sell it? And hey, what about silver? Is it just, diet gold, or is it something totally different? So in this explainer, we're going to unpack a simple, clear strategy that answers all those questions. We're going to give you a framework that goes way beyond just buy and hold. First things first, to really build a smart strategy, we have to understand the why. What's the core problem that sends people like us looking for an alternative to cash in the first place? Well, that search for safety usually kicks in with a realization that can be, pretty jarring. When you see government debt climbing past $35 trillion, you start to hear some analysts say things like this, that maybe the only way out is to devalue the currency itself. And that is exactly why you always hear gold called an inflation hedge. The idea is super simple. As the value of your dollar goes down, the value of gold tends to hold its ground or even go up. It protects your ability to buy things, your purchasing power. Okay, so you've decided you want to protect your wealth. Now you've got another choice to make. And it's not just about buying metals. You've got to understand that gold and silver are two very different players on the field, and they each have a unique job to do. The easiest way to think about it is like this. Gold is your anchor. It's the big, stable, globally recognized safe haven. It doesn't rock the boat too much. Silver, though, silver is more like your speedboat. It's way more dynamic, more volatile, and it has this incredible secret weapon, a massive, growing demand from industry. And this is what's so fascinating. Just look at how essential silver is to our modern world. More than half of all silver demand comes from industrial uses. We're talking about the guts of solar panels, electric cars, and even that phone you might be holding right now. This creates this constant underlying demand that gold just doesn't have. Okay, so this brings us to the real heart of the strategy. Let's pull back the curtain on a simple tool that the pros use to figure out which metal, gold or silver, is the better deal at any given moment. It's called the gold to silver ratio, and it's not as complicated as it sounds. All it tells you is how many ounces of silver it takes to buy 1 single ounce of gold. Think of it like a price tag. When the ratio is high, it means silver is on sale compared to gold. Simple as that. As of right now, that ratio is hanging out at around 64 to 1. So 64 ounces of silver gets you 1 ounce of gold. Now, that's a pretty big move from just last year when that number was way up in the mid-80s. And when you look back through history, you see just how wild these swings can get. I mean, way back, it was fixed as low as 15 to 1. The average for the 20th century was about 47 to 1. But then, look at March 2020. During that crisis, it exploded to over 125 to 1. It's in these massive swings that real opportunity is created for investors who are paying attention. So, that's a lot of data. What do you actually do with it? How do we turn all this history into a simple, practical plan that takes all the emotion out of the equation? Let's look at the 80-60 rule. It's really straightforward. When that ratio climbs up to 80 or even higher, that's your signal. It's shouting that silver is cheap compared to gold. So you lean towards buying silver. Then, when the ratio drops down to 60 or lower, the tables have turned. Now, gold is the better value. And anywhere in between, things are pretty balanced, so you can just hold what you have or buy a bit of both. See, when you follow this rule, what you're really doing is making a bet that when the ratio gets stretched way out, silver is eventually going to catch up to gold. And because silver is a much smaller market, when it moves, it can really, really move. It's why some experts believe silver's next big run could be absolutely explosive compared to gold. But here's the thing, buying is only half the battle. A truly smart investment strategy isn't complete without the most overlooked part of the whole process, a clear, well-thought-out plan for when and how you're going to sell. This is probably the single most important question that most investors just never get around to asking themselves. You can spend decades doing everything right, preserving and growing your wealth, but what's the end game? At some point, that value you've stored needs to be put to work. And look, there's no one-size-fits-all answer here. Your exit plan has to be built around your life and your goals. For some people, it's about funding their retirement. For others, it's a safety net for emergencies. Or it could just be a strategic move to take some profits off the table and move them into another asset. And this brings up a really powerful idea. Selling doesn't have to just mean trading your metal for a pile of cash. The more advanced way to think about it is as an asset conversion. So instead of turning your gold back into dollars, maybe you convert it directly into something that generates income, like a rental property or a portfolio of dividend stocks. So let's just put a bow on this. What does a smart exit plan really look like? First, you time your exit based on your life, retirement, reallocation, not on a panic attack from watching the news. Second, you sell in chunks, not all at once, to reduce risk. And finally, you always know what you're going to do with the money before you sell, whether it's buying another asset or setting up an income stream. And all of this really brings us to a final thought. Is real wealth just about the stuff you own, or is it about the quality of the decisions you make over time? Having a clear strategy from the day you buy to the day you use that wealth to build the next chapter of your life, that's what truly matters.